Hello guys, so this is the post-market analysis of 10th of December. So looking at the fall, looking at the structure of the fall, in fact, it's not that great. It shows some deeper concern. There is a deeper weakness. So you see the last 2-3 days especially, it is almost even the last 3 days if you have seen from 26,200, it's almost 25,720 it came yesterday. Now it closed at 25,750, which is almost 500 points down in the last 3 days. So this is severe. So there are some structural issues that we need to discuss. So multiple reasons I have discussed. Rupee depreciation as one, and the EU trade deal, right? And then the US trade deal, right? And this banking fraud issues that I have discussed in the pre-market. So multiple issues are there. So let's look at the technical structure, the intraday behavior and everything. Okay. So we have seen when we started off this December series, the first day you got a very strong move. In fact, it broke 26,300 level, right? So the first day, that low was, trying to get protected most of the time. So what happened is this was massive and it was getting protected till yesterday. So that first day, the December series, if you look at it, right? So that low was getting protected till yesterday, and that low was broken yesterday. So the low was 25,850, and I've told you multiple times 25,850 is a major support, technical support. 26,000 is a psychological support. Psychological support is now getting broken here and there many times. And this 25,850 yesterday it is broken, and today also it is broken. So that level is getting very weak. In fact, it yesterday at least some positivity was, it closed above 25,800, but today it closed below 25,800. See, this is not looking good, right? So you can see as of now, it is looking structurally weak month, and the stability of the trend you are losing, and institutions, FIIs are selling aggressively, and that's normal on December. But here, this is getting aggressive, especially if you look at the last 3 days selling, it's aggressive. So in fact, if you look at today's price action, it was brutal. Morning, we have seen a very good recovery. So we thought that it actually filled the gap of yesterday, right? It came to the 200 EMA. So that means we were thinking about, is there a possibility of trend reversal? So it came to 25,950 also. So that's almost 200 point recovery from yesterday's low, which is 25,720. Almost 230 points it bounced, and then came the bigger fall, right? So it just kept falling. So sharp recovery we have seen, but the entire recovery and even more than that, it got sold into aggressively the moment it came to that 200 EMA in 5-minute time frame, and the moment it filled that gap of yesterday, and the selling was so aggressive. Nifty and Bank Nifty, the good thing is that it did not break yesterday's low. It almost came there, but yesterday it recovered and closed above 25,800. But today it closed at below 25,800 and 25,750. That's the concern. So it's a dangerous close today. So what is this is showing? See, every bounce is now becoming a selling opportunity. The confidence in the market is missing, and the traders are booking profits and cutting long positions very quickly also. Again, if you look at the mid cap and small caps, there is a complete carnage. The damage here is far worse than Nifty. MCX have fallen 5%, BSE 5%, and multiple quality stocks also have seen the deeper cuts. So what is that behavior suggesting? There might be margin calls hitting the system that I've already done the video, right? Even in the derivatives, and those who have done for margin trading with the help of brokers fund. So what is happening is, when there is a down move, the broker will be asking for the margin, more margin. But if you don't have more margin, but you have taken excess leverage, then automatically the position will be squared off, right? So that forced liquidation is happening in those leverage portfolios, and high beta stocks are facing panic selling also. So that is the reason why this kind of 5% kind of fall, right? Other than that, we have seen the issues with Indigo and Keynes technology. So that is also getting affected into the market sentiment. Now, if you look at until 3 o'clock, the VIX was only slightly down, and market was trading like two-way manner. You're getting a bounce. Initially, you got a bounce and then the fall, and then the pivot, and then you got a bounce, and then there is a fall, right? And traders was expecting a short covering bounce, at least once it bounced from S3 level. We thought that it will be giving a short covering because of in fact, I expected that it will close at least above 25,800 because Fed meeting is there and everyone know that there will be 25 basis point cut. So in fact, the shorts should cover the position so that the risk will reduce and market. I was expecting that the market will stabilize at least towards the end, but that short covering of never came. I don't know the reason. May not be a Fed rate cut, but everyone is expecting. But the thing is that it would have been captured by the market already, right? It's factored in. So at this point of time, there is no short covering is required. The fear is dominating in the market, and traders are expecting negative outcome from the Fed. Even if there is a short, this interest rate cut will be there 25 basis point, but still there could be a hawkish commentary. So that is why, I think that could be the reason. Otherwise, when you see a Fed meeting is there and we are expecting that there will be a rate cut, we know that it is going to happen. Still, there is no short covering, at least towards the end. There was a big candle which came towards the end, but at that point of time, I thought it will be going for a short covering, but that again got solved off, right? So traders are expecting negative outcome maybe from this, and even a potential gap up tomorrow is not enough incentive to cover the shorts because anyway that much fear is there in the market. Again, if you look at the levels, as I've told you, see, we were looking for 27,000. The moment they have broken 26,300, we thought that next is 26,500 and immediately it will go and hit 27,000. Maybe this December itself, and new year will be starting with about 27,000, but that's not happening. You just came to 26,300 and from there the selling started. Now it's almost 550 points have been gone from the top, right? So that chances now is not there, right? Immediate range as we see, it's 25,500 and 26,000 is the resistance now. So earlier we were looking for a range of 25,800 to 26,500, but now it's coming down 25,500 to 26,000. 26,000 is now resistance. Earlier 26,000 was the emotional or psychological support and 25,800 was the technical support. So both have been broken. Now it's not that great. See, rate cut is expected from today's, Fed meeting, but the commentary, that's why the fear is about the commentary. It could be hawkish, caution, right? So at 12:30 a.m., the rate decision will be there and 1 a.m., the Powell speech will come. So Fed may cut the interest rate that is known to everyone, but could deliver a hawkish guidance on the commentary, and that could be the reason. And, that may trigger a fall in the US market. And if US market fall, what we'll see, we will see further more downside tomorrow. It may come to 25, maybe 500 level also, if that is the case, right? So that's why the traders are booking the profits aggressively and there was no such short covering also. So these are the things mainly I want to discuss. Okay, so the main conclusion is the structure is weakening and there were multiple attempts to recover even in the morning also, opening also, but it is getting solved into. So now the bounce is getting a selling opportunity. Market is like having the fear. So sell on bounce is the present norm in the market. Mid caps and small caps are in deep trouble. And it could be because of the possible margin calls that is accelerating the fall. And the Fed meeting tonight will decide what is going to happen tomorrow. But we know that rate cut will be there and hawkish commentary will be there, and that's the reason why the sell-off is also there. So that could be, we'll see a continuation tomorrow. That's what I feel. Any bounce is going to be a selling opportunity. We'll see further in the pre-market analysis. If there is something, I'll discuss that in the pre-market analysis. 26,000 is no longer is now getting easy. The moment it is going to 25,900, it got solved into, right? So 26,000 was a very good support, psychological support. It was supporting multiple times. Now it is turning out to be a resistance. So the range that we are looking for this expiry is 25,500 to 26,000. So the short-term sentiment as of now is bearish and the big AI investments are coming, but they cannot offset the near-term fear. That's a long-term positive. So that's all what I want to discuss. I see you in the next video. If you're looking for any live market mentorship session, we have the live market sessions every day. So get in touch with us. See you there.